Yeah, it's kind of exciting, this whole thing about the refi and the rates going down and things like that. And I think the thing I really want to talk to you about, it says some questions that have come in from our audience. Says it's been suggested there is as soon as or soon will be a refi boom, and we've been talking about this for a few weeks. But you're seeing some homeowners behavior differently in this environment, and really, how so is that? Why is that?
Yeah, it's really kind of interesting because, in my mind, here we are, as we just talked about, we're in the fives. We're in the fives for conforming loans, FHA, VA. And when you consider the last couple of years with all the dismal news about how, home purchases have slowed down and it's difficult to qualify, there were still many transactions that were done, and probably in a lot of cases with what we call situational buyers. Remember that? People who, because of their situation, needed to buy or had to buy, even though rates were high and they otherwise wouldn't have done that. So you've got people who a year ago, year and a half ago, closed purchase loans, in some cases approaching 8%, certainly in the sevens, low sevens. And so as a consequence of that, when you're looking at conforming loans in the fives and FHA, VA in the very low fives, you would think that this perceived refi boom would just be coming at us in a big, big way. And I would argue that's not quite the case. Yes, application activity in refis is certainly up. There's definitely more conversations going on with homeowners about refis, and we are seeing an uptick in actual applications. So that is all true. But what I'm observing this time, unlike previous refi booms or conditions in the past where refinance activity was ticking upwards, what we're seeing more is a case of kind of like what we talked about in the purchase market. I'm having discussions with several homeowners who are basically like trying to time the market on when to do their refi. In other words, when I'm having these discussions, and typically when I do that, I'm providing them actual numbers. I'll send them worksheets after they give me certain parameters, what their loan amount is, what their estimated value is, what their credit score is. And, with that basic information, I can give some pretty specific, tangible numbers to review. And in several cases now, when I'm doing that and having those discussions, I'm able to demonstrate with some of these homeowners that they can save not just $100 a month or $200 a month, but literally like $400, $500, even $600 a month